I have a dream, that's all I need. I'll make it happen with some work and belief. Know what I want, so I'll take it on. I've made mistakes, but mistakes make you strong.
What is inflation actually?
Inflation is the increase in prices of goods or services over time. Dan just got paid and needs to buy groceries. Dan heads to the grocery store and loads up his cart with the items that he needs. These items cost Dan a total of $100. A year later, Dan returns to the grocery store with $100 to purchase the same items. However, now the same items cost $105 and Dan is forced to remove an item from his cart. Dan has experienced the effects of a 5% inflation rate. Dan must pay $5 extra to purchase the same items that cost $100 only a year ago. Inflation leads to higher prices and lower purchasing power. It's usually a monetary phenomenon caused by a country printing more money than is justified by the country's wealth. When more dollars are issued for a limited amount of assets, the value of each dollar is decreased. Many countries' central banks set an inflation rate target of 2 to 3% per year.
I think David Sachs from the All In podcasts puts it very well. It's too much money chasing too little goods. Usually I would say that the inflation could be categorized in 3 categories: a demand pull effect, a cost push effect, or the built-in inflation. The demand pull inflation occurs when an increase in the supply of money and credit stimulates overall demand for goods and services, and it does so more rapidly than the economy's production capacity. This increases demand and leads to price raises. Sounds familiar? The stimulus checks being forked over and created a spending spree, and all of a sudden, demand was a problem? Cost push inflation is the result of the increase in price working through the production process. When additions to the supply of money and credit are channeled into a commodity or other asset, especially when this is accompanied by a negative economic shock to the supply of key commodities, costs for all kinds of intermediate goods rise. This seems to be the case right now with extremely high oil prices, and the production shortage is still lingering from the lockdowns and maybe even getting a little worse in the near term. Built-in inflation. Built-in inflation is related to adaptive expectations, the idea that people expect current inflation rates to continue in the future, and thus the rise of price on goods and services. Workers and others come to expect that they will continue to rise in the future at a similar rate and demand more costs, wages, money to maintain their standard of living. Their increased wages results in a higher cost of goods and services, and this wage price spiral continues as one factor induces the other and vice versa. We're into a death spiral. I know a lot of people are talking about high inflation, and that's sort of true, but I don't think the inflation we're looking at, around 8% now and going down, it does not have to hit all sectors at the same time with the same force. Though a lot of companies just raise prices just because they can and blaming it on the supply shortage and the increase in fuel prices, every company is not the same.
One company is the one that takes the medicine right away, brings their burn down to where it should be, and then they're able to grow from there. And they really will out-accelerate the competitors. But then there's the company that basically delays and waits. And what happens is by the time they finally get religion to make the cuts, it's too late because even after they make the cuts, they don't have enough runway on the other side.
They burn the capital, yeah.
They burn the capital and then they're in a death spiral.
And I'm one of the believers that this inflation will not last as long, maybe a year, at least at these levels. However, it seems like we're in the middle of the perfect storm.
Look, here's the thing. I think we have to also be sensitive to the fact that the Fed operates on a certain class of data, and that data in the 21st century is pretty pathetic. Nick, you can probably find this, but there was an article, I think it was in the New York Times, that really walked through how CPI is calculated. And it's a bunch of people that work for the government that walk around with iPads, building relationships with local businesses in all these random places all around the country, and asking them to, chit chat for 15 minutes and do these surveys. Now, you would have thought that in 2023 or 2022, what the government would have said to, Visa, MasterCard, American Express, all the payment rails, the banks and Stripe is, send me a feed in the following structured way so that I can actually have an absolute precise sense of inflation, because inflation really only occurs when a good or a service trades hands for money, right? And you calculate what did that thing trade at the day before and what does it trade for today. So you could get an absolute precise sense of it. Instead, we do this random sampling thing, and
subjective,
it's bad.
humans, etc.
So if you read this article, your takeaway will be, oh my God, this is very rickety, and it drives an enormous hammer that we use to try to manage the economy. That's
the Consumer Price Index is a measure of the average change over time in prices paid by the consumer. Indexes are available for the US and various geographic areas, and average price data for selected utility, automotive, fuel, food items are also available.
A central bank oversees a nation's monetary system. With their ability to dictate the direction of an economy, central banks play a pivotal role in a country's growth. In most cases, they are not a government agency, even though they serve their nation. Their responsibilities range widely, depending on their country. Central banks control monetary policy, which means they manipulate liquidity in the financial system to influence the economy. Their actions will determine currency stability, as well as the levels of inflation and employment. They also regulate banks and provide services for a nation's banks and its government. To control monetary policy, central banks issue currency and set interest rates on loans and bonds. Central banks raise interest rates to slow growth and avoid inflation. They'll lower rates to spur growth. By establishing a reserve requirement, central banks dictate how much banks can loan to customers and how much capital they must keep on hand. And when providing banking services for other banks and the government, central banks loan money to members and oversee their activity. They also manage foreign exchange reserves. In the United States, the central banking system is known as the Federal Reserve, commonly called the Fed. It includes 12 regional Federal Reserve banks that are located throughout the country. It regulates banks, and it buys and sells treasury bonds to set monetary policy and steer interest rates.
The U.S. Treasury, which issues bonds and raises capital on behalf of the U.S. government for spending programs. Then there's the central bank, the Federal Reserve, and our central bank's job is to, number one, maintain liquidity in the capital markets so that businesses can invest in growing their products and growing their businesses, and the economy grows, while not providing too much liquidity that you end up with inflationary effects. And inflationary effects means that there's too much money in the market, and you see that money find its way into escalating prices on different, assets. And the Fed's long-term goal, remember, is to provide a stated goal of Jerome Powell in particular right now. This changes over time, but generally the intention of the Federal Reserve is to make liquidity, to make cash available to banks, who ultimately make it available to businesses in such a way that there's enough cash in the system that the businesses grow and that people have capital to invest in growth while keeping inflation at 2%. So their long-term target is 2% inflation.
And on that note, I will leave you for today. And as always, the best investment you can make is in you. If you found some value in this, I hope you will give this video a like, maybe even subscribe to the channel and help me out a lot. Have a nice one. Bye.
I have a dream, that's all I need. I'll make it happen with some work and belief. Know what I want, so I'll take it on. I'll make mistakes, but mistakes make you strong. Let's break it down for a minute. I want the crown, I'm gon' get it. You hear me loud, man, I'm winning. Yeah, Charlie Sheen will be grinning. These ladies know that I'm sinning, and this is just the beginning. I'm closing in the ninth inning. There ain't no point in resisting. Living